Hey, it's another big week in the crypto world, so let's talk about it. We'll go over a crypto tax loophole that you probably haven't heard about, Bitcoin's price pump, and a prediction where Bitcoin will be hitting over $500,000 by a major public figure, and so much more. And of course, we'll be going over what's been on my radar and still on my radar for the weeks to come in both the crypto and NFT spaces. And if you're new here, hey, I'm Kevin, and on this channel, we talk strategies to help you along on your financial journey. If you want to get ahead of the curve and potentially make some life-changing money, let me know by smashing that like button and let's get started. So what's this tax loophole? Well, first we gotta talk about what a wash sale is. A wash sale occurs when an investor sells or trades a security at a loss, and within 30 days, before or after, buys another one that is substantially similar. Take a case where you bought a security when it was $10,000. Then it dropped down to $5,000 and you sold it, then a few days later bought it again for that $5,000 price. Well, without the wash sale, you'd be able to claim a $5,000 capital loss deduction against any other capital gains you had, while still being able to hold on to that security. So the wash sale prevents you from being able to claim that capital loss deduction. However, right now, this law does not apply to cryptocurrencies. So if you are down on any cryptocurrency investments, you can sell it and rebuy in to claim that capital loss deduction while still holding that cryptocurrency. This is amazing if you're down on crypto, but you believe in that asset in the long term. Now, I wouldn't be talking about this if there weren't any news, so unfortunately, there's some bad news. With the proposed $3.5 trillion spending package, they've included a clause in there that says that not only are they gonna raise the capital gains tax to as high as 28.8%, but it would also add crypto under the wash sale rules. On the bright side, even if they did sign this to law, it likely won't happen until end of this year, so you still have some time to lock in those capital loss deductions if you wanted to. Personally, I think the wash sale will get signed into law just because a lot of people are investing in cryptocurrencies, and that isn't that much different from investing into any other asset, so it seems like that should apply to. A question you may have is that, hey, since you're locking in a buy of that security at a lower cost basis, then don't you have to pay taxes on more of a gain in the future? Well, yes. But if you believe in this asset and you're gonna hold it basically forever, then you may not need to ever sell it in the first place. You could just borrow against these assets and not have to pay taxes on any gains because you aren't selling. All right, so if you're watching this video, then you'll probably have some exposure into Bitcoin. So what has Bitcoin been doing? The biggest news this week is that Bitcoin has officially made its golden cross, which is when the 50-day moving average crosses over the 200-day moving average. This is supposed to indicate that we're in a strong uptrend, given that the price in the more recent days exceeds that of the days before that. The whole crypto community has been talking about this golden cross, but most experts say, and I agree with them, that people should take this with a grain of salt. Yes, last time we had a golden cross, Bitcoin ran from about $8,000 all the way up to a peak of $64,000 before it started to come down and head to a death cross. But history doesn't always repeat. Although this could be one of many signs that helps Bitcoin climb up to about the 100K mark, which is where most people are predicting Bitcoin will end up by the end of this year. Another really popular indicator to look at has been the stock to flow model, which in the past has done decently well in predicting the price action, and now is showing that we're actually behind schedule and should get up to about the 100K line soon. What's more is that there's a ton happening in the industries too. Lots of companies have been coming out and saying that they've purchased Bitcoin or other crypto assets to put on their balance sheet. Cathie Wood even recently came out to say that if companies and institutions even allocate just 5% of their funds to Bitcoin, the price would be tenfold of what it is today, over $500,000. She also said that ARK Invest, her fund, has a split of 60% Bitcoin and 40% Ethereum, which just goes to show that not only is the industry bullish on Bitcoin, but Web3 and the whole Ethereum movement too. Finally, Bitcoin ETFs. These funds are what people can buy into in order to track the Bitcoin price without directly buying Bitcoin themselves. But these funds then have to buy Bitcoin. There's been so many Bitcoin ETFs still stuck waiting for approval. And when that happens, there might be a huge influx in purchasing power for Bitcoin. Recently, Fidelity, the third largest asset managing company, has been shown to be lobbying the SEC for approval of a Bitcoin ETF too. To be honest, with so much going on from institution and Wall Street money to DeFi and NFTs, there may not be your typical 3 to 4 year cycle. So it could be possible that we're just gonna continue to go up from here and not have that steep drop off after 3 to 4 years. But only time will tell. Apart from Bitcoin, a lot of other cryptocurrencies had news this week too. To start, Cardano officially entered the Lagom era with smart contracts launching on the platform. This means that all these smart NFTs and DeFi platforms can start deploying their contracts onto the Cardano ecosystem. However, because the development experience on Cardano is completely different than places like Ethereum and other EVM compatible chains, it might take a while for companies to deploy their contracts. Honestly, the exact details of these differences is way out of the scope of this video, but in brief, Cardano uses the EUTXO model, which is the extended unspent transaction model, whereas chains like Ethereum use accounts where you can deduct and deposit funds. And that's probably why Cardano dipped in the recent days after the smart contracts were officially launched, where people are probably buying the rumors and then selling the news or when the thing actually happened. Over time though, I do think that Cardano will pick up steam again once companies do deploy their programs and projects onto the ecosystem, especially when DeFi starts flowing on there and money starts following, which is what happened to Solana and Avalanche and other chains. Speaking of Solana, they had an issue this past week where there was a spike in transactions peaking at over 400,000 transactions a second, and which started to overflow the processing queue. This started trickling from validator to validator and basically grinded the network to a halt. They eventually restarted the network and everything was okay, but it's a good reminder that Solana is still in beta and things like this are expected to happen from time to time. In fact, it's good that it's happening now because we rather have issues pop up now, fix them, and prevent them from happening more in the future when it's out of beta and even more people are using the network. The insane part is that the issues only started happening when it peaked at 400,000 transactions a second, which goes to show how high throughput Solana can actually handle. Now, last bit of news before we jump into what's been on my radar is that there was an employee at OpenSea who was exposed for front-running front page drops on the platform. This means that the employee was buying NFTs knowing that they would be published to the front page of OpenSea, which usually leads to a spike in volume and price, where he would then dump for that higher price, profiting the difference. Now, because these aren't securities, there's no actual concrete law that prevents people from doing this, but it is completely unethical. Now, so far it seems like OpenSea has commissioned a third party to start investigating into this issue, but I wouldn't be surprised if he ends up being let go. From this thread, it seems like this person made about 19 Ethereum from doing this trick. If that's true, then that might not be worth it, because yes, you're getting 19 Ethereum, but you're risking losing your job at a growing platform that has done over $1 billion in transactions over the last 30 days, which with a 2.5% commission, that's over $25 million in revenue in just a month. Alright, so with news out of the way, here are the things that I've been looking at. First off, I'm really beating myself up for this because I didn't win the gas war for Galaxy Eggs, a project I've been talking about for weeks, and I didn't pick any up on the secondary market when they were only 0.4 ETH. And now, post-reveal, it's over 1 Ethereum floor price, which is rare. I still think that the art on these eggs are insane, and I haven't really seen anything come even close. I feel like I really missed the boat on this one, and to be transparent, I haven't bought one yet, and hopefully I don't look back like a year from now and regret when I see eggs at, I don't know, 50 Ethereum or something. NFTs wise, I'm still keeping my eye out on projects like Akira and Mechaverse, so we'll see how those go. If you want more details on those projects, check out my previous video where I talk about them up in the corner and down in the description. I said last week that I'll also be focusing more on cryptocurrencies, which is what I've been doing. The two areas that have stood out to me so far are the Polkadot ecosystem and the whole gaming crypto NFT space. The Polkadot ecosystem is mainly because they used to be neck and neck with Cardano, but have since fallen way behind. With parachain slot auctions coming soon, I think that DOT will probably start picking up steam because people need DOT in order to lend to these projects in order to go for these auctions. That means that projects under the DOT ecosystem will go up even higher too. So I'm dedicating some of my research into that area. Gaming cryptos, on the other hand, are inspired by people like Becker, who says that no matter if we're in a bear market or a bull market, people aren't going to stop playing games, and I agree with that. The main one I'm in is called DeRace, which I've also talked about before, but there's so many out there and so little time to look into all of them. Now, I came across this tweet earlier that broke down some of the numbers in the ecosystem. OpenSea has 200,000 users, and Axie Infinity, the game, has 1 million users, and DeFi has 10 million users, which was later corrected to be 3 million. On the other hand, Minecraft alone has almost 600 million users. If you're in this space and you're watching videos like this, then you're early, and we're all early too. This is like the beginning of the internet. We're watching complete industries being rebuilt in front of our eyes, from the gaming industry to the whole financial sector. Crypto will be a huge part of our future, whether you like it or not. So why not get in early, get in ahead of the curve, and make some potentially life-changing money, which in all honesty is a significant part why I'm in this space. But I'm also here because I want to share this knowledge with more people in order to build a community where we can chat, discuss things, and create things together. With that said, thank you so much for watching. If you enjoyed crypto content like this, be sure to like this video and consider subscribing to the channel. If you have any other topics you want me to talk about, projects to discuss, or you just want to spin up a conversation, feel free to comment down below and let's have a chat. As always, invest safe, and I'll see you in the next one.